And you're gonna send it where? Oh shit, well, you might have to show it because, oh, there it is.
It's in Discord.
That's,
It's the last link I sent.
okay, I gotta figure out where I'm gonna open it. Oh shit, that kind of sucks. I'm just gonna put it down here. Hopefully I'll figure out how to do it. Starting soon, it says, okay. Good morning, everybody, and welcome to SPX Daily Plan. And let's get the screen shared and let's get busy. And if you want to get my Substack or join our free Discord, and we have a paid one also, click the link down below somewhere, and let's get started. And as you can see, after Friday's attempt to kind of bounce and move around, we ended up closing pretty much unchanged. We closed pretty much at, I think, up 2 points from where from the day before. Over the weekend, we had a little bit of a move up. At one point, when was it? Monday, we were up, somewhere in the 65, approaching respectability. Oh, wow, maybe we'll get towards 68, 6,900-ish, who knows? But that didn't happen. That was Sunday night. Monday, we got kind of weekend, and then the overnight session. I was kind of watching last night, and we just kind of had this waterfall. And the most I can come up with to explain it, a lot of times there is no rational explanation. There was a lot of cross-asset news. I posted about it on Twitter. And that's not my lane, so I'm going to stay out of that lane. But I'm just going to say that gold rates, the AI contagion fear, dollar, all those headwinds and cross-asset stuff are just making the market nervous. In addition to that, like I said, the whole AI contagion fear. Okay, let's get to the notes. And this is a note that my Substack subscribers get. And context. So we closed 68.36 flattish. The tape said nothing happened, but really a lot happened. So let's talk about what happened a little bit real quick. I just want to talk actually about the volatility space. Where is it? So on Friday, we had VIX open at around 19. We went 19 to 22, or to 20, back down to 19. And now we're kind of pushing 22, the top of the range. I'm going to show you in a minute why I think 22 is important. Now, what is wrong with this picture, so to speak, is that the VIX options are a point higher than the VIX futures. That's not supposed to happen, quote unquote. And what that tells me is that this is more related to whatever hedging has to be done for the VIX futures for the VIX options expiration expiring tomorrow, last trading day today, than abject fear. Now, that said, we're still at VIX 21.5 for 30 days out. So it's not like the market is saying party on, Garth. It's just said the VIX right now is overstated compared to the futures. How much we can say. This should be 2 points lower, 1.5 lower, 2.5 points lower, a point if we want to get carried away, just broadly. So, and we're going to get to that in a minute, because a lot of what I'm seeing has got to do with what's going on in the vol complex. Okay, skew is extreme. Fear is concentrated. The QQQ AI narrative, if you look at the QQQ skew, it's at some ridiculous level of puts. Now, that doesn't mean the VXN, the VIX volatility, it's the skew. It's a difference between the 25 delta QQQ puts and calls. So the calls are real expensive. The puts are the calls are real cheap. The puts are real expensive. So it's that differential that's at an extreme. The VIX 9-day, which is basically taking into account this Friday and the following Friday. Last time on Friday, it kind of was briefly. It was, I don't know if it was above the VIX, but it was certainly like a half a point or a couple, decimal points away from it, indicating that there's this really, the near-term fear is elevated. Short-dated protection is still big. And like I said, asymmetry like that can't last forever. I don't know if we're talking about a few days or a week, but this tends to reprice. VIX is mean reverting. These flat curves or backwardation where the front is higher than the back. Correct. When they do, we get those nice snapback rallies. When they do. Okay. Meanwhile, IWM is up. Most of you know Dow isn't breaking. So the market is bifurcated, rotating, however you want to conceptualize it. Okay, so write this down. The numbers that you have to keep in mind today and at least going forward in the week are 6,800, 6,820 as the pivot today and into the week. 6,750 down below is going to be real important. And of course, 6,900 or even 6,885 to the upside. Of course, over 6,900, things change. Let's add the 50-day moving average, which is around 6,890. And those are the numbers to keep in mind. In a minute, we'll show you why. Actually, we'll show you why right now. Okay, for earnings and events. Okay, so we had retail sales. I didn't see much of a reaction. Business inventories in the Discord. We posted daily, whatever, event calendar. And we have a couple of, I think we have Barr speaking 2 or 3 times. He's like on tour. I think it's Barr and a Grateful Dead cover band are kind of touring together. That's what I saw. And so that's what's going on there. So coming up this week, just so we know, we have VIX expiration tomorrow. For those of you that are not familiar with it, I'll do a brief explainer of it. What that means, we have FOMC minutes coming out on Wednesday. And then topping it off, we have on Friday the PCE, the Fed's preferred measure of inflation. Every time they say PCE in the financial press, they have to say Fed's preferred measure of inflation. So I get kicked out if I didn't say that. So that's the Fed's, not to remember the financial press if I play one on TV. And so here we are. Okay, so let's talk about what's going on here. Let's talk about this mess. So, again, quick explainer. Bars to the right, our market to the right. That's that way. Bars to the right, our market makers, long gammas, customers sold that. And so market maker hedges opposite the direction of the move. So I'm just gonna pretend we're above 6,800 because we kind of are. As we're heading down towards 6,800, everything else being equal, we're just kind of isolating that idea. As we're heading down, market makers have to buy because they're too short. And as we go up, as we move away too far, and they have to sell, balancing out their dump. So it moves opposite the way we're moving. So these big levels tend to become sticky. On top, we have 68.80. Right now, that's real far away. But if we were up here, it would be the same kind of thing. As we headed up, they would sell. As we head down, they buy. And you kind of do your old vector resolution from Calc 3. And you can see where the or just kind of use your eyeballs. You can see where the vectors resolve. This is pushing down. These is the opposite. We accelerate toward these on the left. And so what do we have? We have this 6,800 to 6,835 in the zone with this big 6770 magnet possibility if we break down. Then we have 6,800, 6,820, kind of where we're hanging out right now. If we can get over the 6,820, we kind of store right near 45.50. And then if we can get over there, then we have this big mess of, in the, wherever this is, 50 to 68, 80-ish range, 85. And then that becomes kind of the top of the expected move. And then who knows? We'll take a big drop in VIX to make that happen. We'll take a big pop in VIX to make 67.70 happen, or VIX staying sustained up here. 67.70 might be able to happen, but kind of looks down. And pay won't break. Okay, obviously paid subscribers get the whole like play-by-play, blow-by-blow. So 6,800, 6,820, key zone, 67.70, that downside marker, 68.50 is the gravity, is the upside, kind of opens the door. Okay, so like, subscribe if you want more details, or this is in the free Substack. So you can get the free Substack and get this. I think this is pretty valuable, if I say so myself. I did say so myself. Okay. Let's take a look over here. See, looking out, and this is options depth, by the way. See, it says options depth up there. This is options depth. So let's just look at some of the numbers and look at some of the sizes. 1,000 contracts matter. Let me make this even bigger so you can kind of see. This matters, 6,800, 6,820, this is small. Below 6,800 though, there's not much. And these greens, these numbers are small, 400. So there's that 67.70. There's that possible attractant down, which is how far from here? Where are we at now? We're at 68.07 still. So that's pretty far, 40 points, probably about the expected move now. So, we are pretty much, that would take a higher VIX to get us there. Why a higher VIX? Because when volatility goes up, well, not necessarily VIX, higher IV, we'll just use VIX as a default, easy way of thinking about it. Because when IV goes up, the distribution of deltas widens out. Forget the explanation. What that means is those positive gamma levels don't hold. They easily break. The hedging gets sloppy. Lines become zones. What does it mean when VIX and VIX feel? Okay, actually, well, that's relatively easy to explain, I think. Let me just, so we had a question here. What does it mean when they diverge? Okay, So let's get back to here. The VIX is 22. The VIX futures, which so this is 30-day volatility, this is 30-day volatility. This is keyed off of this. The VIX, 30-day VIX settles based on the VIX, based on the VIX futures. And just like any forward instrument, there's a premium. So there should be a time premium for the VIX futures 30 days from now above the VIX. That would be like selling you a call at a discount. That's okay. So VIX is saying 22, but the VIX futures are saying 21. So you're not paying anything for these futures. You're getting these futures $2 less than what the VIX is supposed to be settling at. That doesn't make sense. There's always a time premium. So there's no time premium here. So either this is lying or this is lying. I think this is lying. Not that VIX is going to 16, but with VIX, with volatility futures 21.3, we should be at 20. Well, that would make sense. Somewhere in that area. That would be a fair difference. That kind of makes sense without getting too wonky. And while we're on the topic of VIX, might as well jump right into the, okay, let me finish this and then we'll jump into the VIX again. So as I'm looking out into the rest of the week, what am I seeing? Okay, so we have that 67.70 IV over here. And for tomorrow, we have 67.50, pretty large 10 white iron condor, put spread. Almost 6,000 contracts of the 67.50 were sold. Here's the other side, they were bought, 5,000, 5,000. And so that's kind of support-ish. However, for tomorrow, we have 6,800. So
Is anyone else having trouble hearing Doc? Yeah, I think your internet's failing us currently. All right, while he gets his stuff settled, I'll kind of get into my charts really quickly. I'm going to assume you can see my screen and that you can hear me. Hate to cut him off like that, but the show must go on. Guys, real quick, let's break out our range. I have 68.70 down to 68.10 as kind of my range for today. We already hit my bounce zone. I think a move up to pivot will be nice and clean at open. What I'm really going to be looking for is a hold above. You should be able to see my screen. Can nobody else see my screen? Oh, you can see my screen. Okay. So again, big range. I'm looking to see if we can hold above pivot. If we can't hold above pivot, I prefer a 15-minute candle close. I think a really nice clean move up to 68.70. Obviously, a lot can happen within a 15-minute candle. So the smaller the time frame, the worse that kind of entry is. However, you want to take advantage of something if it's going to be quick, right? So 5 minute, 52. We just had a pretty big push here on NQ. Anyways, hold above pivot. We'll take it up to the ceiling at 68.70. If we don't seem like we're rejecting hard at 68.70, tag 68.90 as a pretty simple trade. I think we're going to have a nice little push up today, and we'll be selling off into Wednesday, Thursday for a nice relief up on either of those days. Any questions, guys? Cool. Another thing, I'm going to drop it in the comments. It's already in the YouTube description. Let me pull this up for you guys. Doc is launching his mentorship program. It is going to be in beta test. So it will be a group call. We're limiting the amount of people at first. It is beta, so we're not done with it yet. It will be a cheaper price than when it comes out, fully finished. That's going to start March 15th, but we are going to start accepting participants now. So I'll send that link in the comment section. It's in the YouTube description. Looking forward to really sharing that with everybody. You'll get access to me and him. And Doc's internet did go down, so he's probably not going to be back on the stream. If you can see, nice move up to pivot. Unfortunately, we missed that trade. I don't like to trade pre-market, at least not this early to the New York Open. But pretty clean trade. Now we'll see if we can hold. We'll see if we can hold that pivot up here. If we can, be bullish. Other than that, guys, feel free to reach out to me and Doc in the server. You'll always know you'll find him there or on X. Looking forward to seeing you guys later. Bye, everybody.